Joining me now, John Carney, financial journalist, and first time on set, Neil Dutta, Renmac, head of economic research. Gentlemen, thank you. Neil, what do you think of the story? I'm just going to give you open field running. Start us off, please, in honor of your appearance.
Well, thanks for having me on, Larry. It's an honor. Look, I would just say, if you had to look at the markets, stocks are basically at records. The bond market is basically pricing in a more rapid path back to neutral, and inflation expectations are fine. So what explains that? What's the release valve for that? It's what you mentioned, productivity growth. So, I think what's notable about productivity, as a forecaster, is that you never really know it. You never forecast it. What you basically will see is the consensus just marking up their estimates year after year after year. That's how you know you're in a productivity boom. But that's basically what the markets are signaling.
That's the business CapEx and the factory orders. I mean, we had production yesterday, I think, industrial production. And business CapEx in that one was up big, nearly 10% at an annual rate since January. It's really quite a number. Industrial production, business CapEx underneath
Well,
that.
the AI boom is adding a lot to GDP growth, as we know. We know that information processing equipment, software spending has been quite strong. I mean, in the first half, probably stronger than consumer spending, right? So, that's ongoing. And clearly the markets are still rewarding companies when they make additional AI announcements, right? Their stocks are rewarded as they make those announcements.
So, John Carney, give me your lay of the land. I am casting Myron as the hero, first of all. I think it's just terrific stuff. Shot across the bow. And they're, the same old blah, blah, blah. I can't watch J-Powell. I mean, I try, I listen to a few words. I can't watch it. It's all mumbo jumbo. But I do find it annoying that their growth estimates are less than 2% forever. It's a complete repudiation of Trump. It's just saying none of this stuff matters. We can't grow. They're not listening to what Neil's saying on the productivity front, the AI front. I mean, who are these people? Their heads in this, they have 1,000,000 degrees and their heads in the sand, and they do the same thing month after month, quarter after quarter. It never changes. What is up with that?
The Fed should be projecting much higher growth, at least in the long term. Look, they can't do anything about next year, but when they say we're only going to grow 1.8% forever, they're basically saying we are bad at our jobs. We are going to withhold the economy from growing faster. They should actually look at it the same way they do the inflation target. They always project that they get to their inflation target 2 years from now. They should be projecting a higher growth rate because they should be calibrating monetary policy so that the economy is growing faster than this pathetic 1.8%.
NEC director Kevin Hassett, who's a very smart guy, was on this show yesterday talking about the AI revolution, the capital goods revolution, factory orders revolution, and the fact that the GDP now is at 3% plus. And Kevin is saying we could grow by 4. There's no reason why they can't reach 4. Maybe not forever, but certainly on some kind of year or two trend line. The Federal Reserve, pleased to acknowledge that. And here's the other thing. This is disinflationary growth. This is supply. Right. You're producing goods. You're producing goods. You're not stimulating demand. You're producing goods. It's a whole different ballgame. Now, the Fed's got 5,000 PhDs, whatever the right number is, okay? Why don't they know that? Why don't they get, where's a group saying, hang on a second, we have a different view of the way the world works?
This is why Donald Trump had to send Stephen Myron to the Federal Reserve. You're absolutely right. He is the hero of the day. As far as I can tell, he is the very first Fed governor to dissent at the first meeting. He didn't waste any time. He wasn't fooling around. He came in and he said, you guys are getting it wrong. Yeah. I'm going to publicly state this. Look, I think some of the other Fed governors probably also think that they should have cut more. We'll find out eventually when we get the notes. Mickey Bowman, Chris Waller. They probably should have dissented as well. But good for Myron getting in there and not trying to say, I'm going to play nice. And I hope he's also going to do that to these economists who are telling us that the economy can't grow faster than 1.8%. He should go in there and say, guys, you've done the models wrong. Here's how to do it.
That's the thing. You sound very bullish, Neil, on the stock market. We don't do enough stock market stuff on this show, except when something big happens. I thought something big was going to happen today, but it just didn't. It sort of bounced around. I'm not sure. Maybe tomorrow it'll roar. But you sound very optimistic.
Well, I mean, I'm a little bit more cautious on growth, I think, than you guys, to be honest. I mean, for example, housing permits hit the skids this morning.
Terrible number.
So
I agree. Terrible number.
And we know that construction employment has been contracting. So, as a business economist, one of the things I'm looking at is how do you reconcile this strong growth in GDP with very weak growth in hours worked, right? So maybe productivity is picking up, but I thought it was interesting. My sense of the meeting was Powell was basically trying to guide the market to like 50-50 for the next couple of meetings. I don't think 3 cuts this year are a slam dunk. And when he kind of hinted at that, look at what housing stocks did. Home builders rallied, and then they sold off into the end of the day. So I think that's pretty revealing.
The longer Powell talked, the worse the market did, and it did seem like he was trying to talk down the market from what the SEP actually showed, which was that we should get 2 cuts. I felt like he was trying to push back on that.
I would have thought, I mean, just speculating, I'm not in the market the way you are, but I would have thought 1 cut plus 2 was quite optimistic. I don't think that was the consensus. And it just seemed
really narrowly divided. I mean, you had a lot of people on the committee that still saw only 2 cuts. One of them even thought that there might be a hike.
Really?
So it's still a very, very...
Lisa Cook? Who was that?
I mean, it's possible. But I just think, you mentioned Waller and Bauman. I mean, maybe the best they could have gotten was trying to lock in 3 cuts for the rest of the year.
Will interest rates come down for auto loans, for appliance loans, for home loans for that matter? I mean, mortgage rates have slipped back towards 6. I don't think they're at 6. But are those rates going to come down as a result of the Fed?
No, a lot of this was already built in because people did think that they're going to cut. And as Neil was saying, the Fed is pretty divided. It's more divided than I've seen in a long time. Yes, there were 9 votes or 9 dots for having 75 basis points this year, but there were a bunch of them, 8 just below that. So I think the Fed is very divided here. It's hard to tell what's going to happen.
I think it's time to replace many of them. I don't mean that. It's not personal. I just feel you have the majority of the FOMC, which is the 7 governors plus 5 Reserve Bank presidents. The New York guy always votes, okay. But you've got Reserve Bank presidents out there that have been appointed by the Biden administration. They've been there too long. That's my view. They've been there too long. Mr. Trump should have an opportunity to shake him up, to reappoint. I sincerely mean this. The Lisa Cook episode, I think, is going to be a layup. The Supreme Court will rule with Trump, as they had with other things. But more than that, you've got too many Biden holdovers. It is the Trump administration. I would say the same thing about a Democrat, and I might not like it one bit. But the president, the executive who comes in, should have an opportunity to implement his or her policy. And the Fed is resisting. That's why I pointed to this, 1.6 or 1.8% growth forever. That's their policy. That's not Trump's policy. They might not agree with Trump's policy, but guess what? They weren't elected.
Larry,
he was, by a popular vote, no less. He has a right from the voters to appoint his central bank.
When Congress set up the Federal Reserve under its current build in 1935, that's what they tried to accomplish. In fact, the senators who were constructing the bill said that the Federal Reserve, that the president is entitled to a Federal Reserve that supports his policy. He's the elected official. They are not.
We have, just to have some fun, break it up a little bit. Here's Mr. Trump on Steve Myron and Mr. Trump. We got that tape. I really want to run this tape. Neil, you're going to love this. This is pure Kudlow tape. Here it comes.
For the first time, Stephen Myron's commission. You know him, he's very talented. He'll have a big influence on this, on 2 legs getting his rates down again.
Who do you believe the Federal Reserve is an independent body? What do you think about the independence?
It should be, but I think they should listen to smart people like me. I think I have a better instinct than him.
Smart people like me. But you know what? You know what? He's often right. Now, Neil, feel free to disagree. But my point about appointing your own team when you get elected, I would say the same thing, as I said, even though I might not like it if a left-wing Democrat wins again. The fact is I'd have to accept that. That's the way our system is geared.
Well, I mean, politics is about what's possible, Larry, as you know. And maybe one compromise is maybe you shorten the tenure of
Right,
these
you
governor
could.
positions.
That's
that
right.
would be one. I mean,
That's right.
because they have like very, very long appointments. So maybe that gives the administration opportunity to put more of their people on the Fed.
You haven't talked to Myron since he's gone over. He just got over.
No,
I
not
haven't
yet.
either. I haven't either.
I
He's going to push hard, though. He is a smart PhD. Okay, he's, if I'm not mistaken, was a Martin Feldstein. A researcher. So he knows his stuff, and he's gonna go chin to chin with those guys.
He is, and he knows the mission, which is to break up the consensus, the groupthink at the Fed, not to look. For too long, we've had the Fed meetings where you see almost no difference. Everybody just follows what the Fed staff tells them is happening. Myron actually has the ability to go in and see what they're getting wrong.
Got it. Neil, last one. Gold. I'm going to play devil's advocate in my own position now. Why is gold exploding? If everything's so good, why is gold going up so much?
You know, it's a great question. I just think that there's a relentless bid for gold. I mean, it's going up when the dollar's weak. It goes up when the dollar's strong. It goes up when real rates are up. It goes up when, I mean, it's just something to add to your portfolio, and maybe more people are.
You don't think it's a signal of massive inflation?
No.
Right. You don't think it's a signal that the dollar is ending and the Chinese yuan and their pals are going to take over the currency markets?
No. You know, look, Larry, I'm Indian. Maybe it's a sign that more Indians are getting married. You know, gold is a big part of the Indian
Actually,
wedding
I've
scene.
I've seen this. I've seen this theory written. Since you are of Indian descent, can you stop them from buying Russian oil? Oh, wait a minute. That's
well, I
a
was
separate
born here,
segment.
Larry, as you know.
That's a separate, completely separate segment. I'll back off. John Carney, thank you. Neil Dutta, it's a pleasure to have you up.